Hello, everybody. This is Bart Bettiga, the Executive Director of the National Tile Contractors Association. And I have with me a special guest today. I think it's a very important topic. I would like to introduce him right now as the Chief Operating Officer, and that is Gregory Wood of is it Business Incentive Solutions, Gregory? Is that the name of the company?
That's correct.
And you're a California company. Tell us a little bit about your company, and then we'll get into the topic I want to talk about.
We're located in Orange County, California. We do, of course, process credits for every state. Federal credits are available everywhere. We're located in Orange County. We've been doing this, Bart, for 16 years. So it's something that we specialize in. And our goal is to help every small to mid-sized business take advantage of the credits they're entitled to.
So how does my contractor members are always about risk. How do they pay you? How does the process work?
It's a great question.
How long then will it take for the credit to generally come back to them? What's their upfront cost to you? And are they going to be scared of giving you that deposit?
They're not. They're not. We never have an issue with the client. It's very, very simple.
Yeah.
And our model, but is unlike really any firm out there. It's not the best business model for us, but we do deal with small business owners, and our systems worked for the last 15 plus years. We will receive the file from our partners, TED, for example. We will do the initial work. We will issue an incentive analysis where we calculate 1 year at no charge. We do not charge the business owner. If there is no tax liability or there's no recovery, we part as friends either way. We don't send a bill to the client for our accounting hours. When the incentive analysis is issued, they will execute and sign our consulting agreement. When we're done with the work, meaning the other years, we will charge a progress fee, which is half of what our fee would be. We charge 33% of what we recover. So we would charge half of that as a progress fee because we have done all the work. Every time I talk in front of a group, Bart, I use the contractor as an example. It's unlikely a contractor would go in, renovate your kitchen, and then say, I need half the money. So we charge half, and then that keeps us connected with our clients to track the file through the IRS or the FTB. Now, I must, of course, throw a disclaimer out. Because of COVID, the IRS is delayed right now. The IRS is cutting checks. Pre-COVID, which will return, they're getting back on track. Pre-COVID was 6-8 weeks, boom, the IRS cut the check. So we do the work, we charge it half, which is a progress fee. The client will then sign the documents, we submit those, and we track the check. When the refund check is issued to the client, the taxpayer, we invoice on that other half. And that's how it works.
That's great. And how long is it taking now? Somebody told me up to 6 to 8, 10 months.
I will tell you this. Just last week, we submitted a file to the IRS on January 25th. On March 24th, boom. Some take 6 months. We don't know. They were, as of 6 months ago, the IRS was sitting on 38 million pieces of unopened mail. So any delays with regard to the taxing authority, it's not a BIS delay. Everybody's well aware of the delays that the government and the IRS is experiencing, but they're cutting checks. It's going faster and faster. And like I said earlier, they cut the check. It's not a judgment call. So we've done all the work, and then they simply issue.
Never had where you've gotten half your work paid, and then they've never gotten the money, and then you have to pay the client back. That hasn't happened.
No, that's not. Yeah, that's not something that.
Really, no risk to my member here. Other than
there's no risk, but I'd like to say, Bart, so you hit an important point. It's a question I get often. Let's say we did the work and we submitted to the taxing authority and the taxing authority denied it. Well, then we would, of course, refund the fee back to the client.
And that's in their agreement, right?
It is, of course, right.
So really, you're being paid a commission to do the work for them on money you're going to get them. And if you don't get them any money, then they get their money.
Yeah. Exactly. And it's not, I understand the word, it's not a commission. We charge an accounting fee, but it's 33%. What's great is that, the the taxpayer, they're getting this money 67 cents on the dollar. So we do all the work. And I always use an analogy that we sonar the ocean, go dive down, salvage. And then of course we share in that. And this is what's an important point, Bart, is this is the client's money. It's not our money. It's not the government's money. It's not your money. It's not a gift. It's not a stimulus. It's not a check or a grant. They paid the money in. They just paid it unnecessarily because they exhibit these activities that entitle them to the credit. Now, they paid their tax liability like they're supposed to, which they did, because they exhibit these activities are entitled to the credit. We then will file and they will refund that money, just like a W-2 employee when they do a tax refund each year. And so they just essentially overpaid, or they paid unnecessarily. So it's really at its core, it's a very simple couple of three pieces to put together, but there are a lot of myths and a lot of I heard this and sounds like snake oil that of course will dissuade business owners unnecessarily.
Yeah, so my final question then, we get this again from our business owners. What's their pain point? What do they got to get you? What are you going to ask of them when they do get connected to you?
Right. So it would be Ted Lavin, for example. So our marketing partners.
Ted Lavin is a marketing.
What they ask for is very simple.
Yeah.
It's essentially an intro packet, which is business information, business qualification form, activities. There's a checklist of their qualified activities that they will check and complete. And of course, their tax returns the last 3 years with all the schedules, right? And we then receive that documentation and we go under the hood and we will look at 1 year at no charge. If there's just nothing there, as I mentioned, we communicate back to the client. If there's a recovery, a refund recovery, they'll know. And if they decide to continue, they'll execute the agreement and then we go to work under the hood. And what's really a differentiator for us, Bart, is we do A to Z. There are a lot of firms that will not do the amending process. That's left up to the client or their tax person. We do everything, including tracking that check until it's issued to the taxpayer. So,
and what about then moving forward? So this program's still in place. So then
now part of the tax code.
So we work with you. My member gets to you. They work with you. They file 1 year, 2 years, or even up to 3 years back. How about next year? What do we do moving forward?
Well, let's imagine that in tax year 2021, the business owner paid $20,000 in federal tax, and we have quantified that they have $40,000 in credits. Well, most people think, oh, they're going to send me a check for $40,000. No. Those credits offset the liability.
Sure.
So, but now you'll notice there's 20,000 in credits left over. Those don't just go in the trash, Bart. Those credits carry forward for 20 years. So next tax year, they would have credits that we would apply. And so that's where, of course, we have clients year after year that return. They're not really returning like a customer. They just know that let's do this year. And one interesting point I think that's really important in defense of tax people and bookkeepers, clearly, if they did this, they would have been doing it or, have done it or learned it. It's a very niche forensic area of the tax code. So working together with a small business owner's tax person and us, we're not impeding or intruding upon what they do. They don't do what we do. We don't do IT services and we don't do staffing. So there's a lot of entities for a small business that are really important. So next year, we look at their next year's return and hopefully can quantify and apply credits as we did in the prior years. And
so they're not necessarily required to file every year, but they could. Yeah, I think that was such really well said, Gregory, at the end there, which is the other thing I heard when I talked to some members is, their accountant was hesitant to connect to you because they were afraid of maybe losing.
Exactly. Oh, of course. It's the first thing anybody would think, right? They're going to steal my client. I would think the same thing if I didn't really know. We're not a tax firm, Bart. We don't do taxes. We don't do end of the year reports. We don't do quarterly filings. We're not doing their taxes. We identify, quantify, document the behaviors of the business as it applies and entitles them to a credit those credits are offset because the taxes were filed. We amend that part of the return and send that in, and they cut the check. I have a great example, and it's an example I use often. One of my best clients, he actually manufactures foam rubber, not the chair or the sofa, but the foam rubber. His facility is floor to ceiling rubber. I said, Rusty, do you ever experiment with the foam rubber? He's like, are you nuts? Of course. Boom, there's an activity. Yeah. Experimenting with that product or that process or the formula. Bart, somebody invented the Tempur-Pedic mattress somewhere. So there was innovation going on. So because of his activities and his expenditures related to experimenting or upgrading or changing, that triggers the credit. I can assure you his tax person had never been to his facility and doesn't really know what he does in relation to his activities. I don't really know what they do in relation to his taxes. We know the credits, we know the behaviors, and we know how to quantify the credit. That credit offsets their tax liability, the open year or going back 3 years. Because they're entitled to it and they didn't claim it, you have up to 3 years to claim it. We just lost 2018, right? At April 18th, 2018 went away.
Yeah.
Now it's 2021. So yeah, that's how that works.
But we need to get going on it. So to be clear, then again, our members could work with your company through our marketing agent, Ted Lavin of ICA Advocate. They could work with you on all of our members could work with you on federal credits, and our California members could potentially work with you on both federal and the state of California.
That's exactly right. That's exactly right.
All right. Well, I hope that our members take advantage of this. In our correspondence, we'll give you complete information on how to, we'll connect you to Ted Lavin of ICA Advocate, who will then connect you to Business Incentive Solutions. Thank you.
Right. And I think the last thing, Bart, that if I could, and just a parting comment for all of your members, take the little due diligence would be spend 10 minutes, go on Google and put R&D credits for contractors or construction contractors. Right. You'll be amazed at the information you see. And that not only validates and gives proper information, but that's what we do is connect those dots. And it's wonderful. We're honored to do this work for small and mid-sized business owners. And you hit the nail on the head through ICA Advocates. They would connect with Ted, who's fantastic. He's, I can't say enough about Ted and what he does. He then forwards the documentation to us.
That's great. Well, we're looking forward to sending more clients your way. We think this is a unique opportunity. We're very happy that we've become made aware of it, and we're happy to share it with our members. This is Bart Bettiga, Executive Director of the National Tile Contractors Association. Our guest today has been Gregory Wood of Business Incentive Solutions of California. Gregory, thank you so much for sharing.
Oh, it's an honor. Thank you.
Have a great day.